Man, I feel good today. I'm not gonna lie. I just had my birthday. 43 never looked so good, you know? Smash the like button for that. But I want to just tell you the moment that I remember things clicking in trading and see if it helps anybody out there that might be struggling, because my first 4 years of trading were horrendous. All I was doing was struggling. All I was doing was losing money, swinging from one strategy to the next, over trading, over leveraging, revenge trading like crazy. And all that to say, I didn't feel like I was progressing, because every entry model that I had tried, I would typically break the strategy anyways. You know, I wasn't disciplined enough to just stick with something even during the tough times. If I went through a patch, you know, I would default to support and resistance, or I would default to something else that I had learned, whether it be ICT or SMC or, you know, whatever it might be. So, you know, fast forward from 2017 to like 2021, I was done with trading, man. I had given up pretty much. I just thought to myself, what a waste of time. I spent a couple $100,000. And yeah, it's a lot of money. I was making a lot of money in crypto. I had invested in a lot of projects and changed my life with that. That's what I was doing on YouTube before trading. And I traded crypto when I first started trading anyways. Traded Bitcoin and Ethereum. But I guess my point is, I met a guy who's much older, retired, and he basically sat me down and said, look, this is what you're doing wrong. You're not protecting yourself at all. Like, you're 100% offense, no defense, you know? And he was right. And so I started to understand this concept, that the first thing that he was saying and that he lived by was his losses were never greater than what he could make back in his next trade. So if he saw it to be a good trade idea, but the loss was going to equal something that he couldn't make back, he would simply surrender the idea, not trade it, okay? If it was an idea that he wanted to trade and that equaled the right amount for his risk allocation, then he would move forward with the trade. Now, sometimes he move forward and get rolled over. That's going to happen. But a lot of times, because he had planned correctly, the next trade, even if he lost the first trade, the next trade would come around and he would execute flawlessly, because it wasn't over leveraging, it wasn't over risking. I recently saw a video of online. This guy's pretty popular, and he makes these videos about the world's #1 scalper. You might have seen this. This is catching a lot of attention right now, because everyone wants to scalp, and everyone sees this guy making a lot of money and just wants to know, you know, the formula behind it. And what you don't understand is he has $1 million in his account and he's risking $2,000 a trade. I want you to think about that. Like, he's risking $2,000 a trade and he has $1 million account. So I see guys that have $10, $20, $30,000 and they're risking $2,000 a trade. That's an incredibly high risk allocation compared to what this guy's doing. And so even if it's, what I want to take away from that is, even though that person is not trading my model and not using my setup, their risk allocation is absolutely flawless. And that's why they're successful, you know, because they've established their constant. They understand their variable. So their constant is A plus B equals C, whatever that mechanical entry model they've come up with is, right? That's their constant, their rules. But there's always variable, right? The variable might be the range. The variable might be how they're coming out of maybe 2 losses for the day. Maybe, you know, if they had won the last 2 trades, the risk allocation on the 3rd trade might be different. So there's variables, but they've established their constant, they've established their variables, and that's why they're able to be successful, because they're giving themselves a lot of room allocating small risk, you know? And what's funny is, like, they're putting on, you know, minis, like 1, 2, 3, 4, 5, 6, 7 minis. And other people are seeing this. And what's happening is they're diving into the markets thinking that they're going to, like, be okay with a $5,000 account or be okay with a $50,000 funded account. Like you're just gonna blow two grand real fast, and there goes that account. So the number one thing for me was taking all of what I had learned and just saying, look, I don't know if any of it actually works, but I'm just gonna reduce my size. The second I started reducing my sizing and just playing the game with lower size is the second I started winning. It was really awkward. It was like, well, okay, I guess, you know, win, and it would stack up, and I'd go, that's pretty cool. Like all these little wins, because I'm trading such small size, you know. So I was like, man, that's crazy. But man, I wish these were big. The second you size up, boom, you're gonna get smacked. So just keeping, and it's happened to me many times, but just keeping those small size amounts, I looked up and I was like, damn, the compound effect from just trading small size adds up to a much bigger picture, one that just can't be denied, you know? So for me, the key to trading successfully and stress-free, where you're avoiding the emotional attachments that you might have and avoiding those emotional triggers that you might have, is reducing your size. Now, for most people, it's just not a sexy conversation because they're trying to compound quickly. And I get that. But once you reduce your size, you start realizing that, wow, you know, all these small wins, they add up. They add up pretty fast, you know what I mean? And this is how I was able to just grow very quickly. And I had put $100,000 back in the market, and I wanted safe sizing. That was my goal. I took $100,000 in a year and a half. I took $100,000 to over $850,000. And what's crazy is all I was doing was taking my winnings, and if I wanted to size up, I would only risk my winnings, right? I would only risk what I was up for the week. I would only risk what I was up for the last couple of weeks. You know, I've had some trades where I did put on bigger size and they ended up working out because the direction of the market was in my favor. And, you know, I saw that. I was trading with the momentum. But this is why establishing a fixed variable, like what I use, is the 15-minute range. The first 15 minutes is a time-based fixed variable. Now, the size of that range, right, that's going to be, that's not my constant, that's my variable. So my constant is time, my variable is the size of the range. And then from there, we can look at other aspects of the market, like, is the breakout of that 15-minute range, is that going in the direction of the market for the day? You know, if I zoom out, what's the last 3 days? Are we up? Are we down? Am I going with high time frame momentum, basically, right? And then do we have levels that we could shoot for? You know, are there some key levels that haven't been tagged that seem doable today, you know, within striking distance? So those are kind of the things that I look at. And then, you know, you go deeper into the opening range breakout, which is the orb, which is what I use, and you start to find that, okay, if you've had multiple flip days in a row, you're statistically more probable for price to not flip the next day. Okay, to not have a flip day. So what do those odds look like? What does that look like? And how can I capitalize on that kind of statistic? You know, we'll call that the fixed, because we don't know if it's going to be a flip day, but we do know if there's been 3 or 4 flip days in a row. Well, how many flip days in a row have there been over the last 5 years? That would be interesting to know, right? And if we know there's only been one time where it was 6 flip days in a row, then we know if we get to 4 flip days, today ain't gonna be a flip day probably, right? So, you know, now it's like, okay, how can I structure my trade to where, or structure my risk to where my risk falls in line with the quality of the setup? And so there's levels and there's layers, but the first layer is to just back off everything and to have the lowest sizing, that the size that, you know, if I asked you, hey, if you lost $5 on this trade, would it matter? Would it hurt you? Would you care? Would it change your life? The answer, probably no, right? And that's the way it needs to feel when you're trading, because it's more important that you execute correctly and that you execute your strategy and your plan without fear, rather than, oh, I'm going to change my stop loss, and oh, I'm going to change this during the trade, all because maybe you can't handle the drawdown, or you oversize, or you didn't size correctly, okay? So that's my breakthrough moment. And I don't remember the day, but I do remember the time period that it was in. And this was back in about late 2021, and it was close to Christmas. And I remember thinking to myself, wow, I've been on a tear. And I was nervous because I had built up momentum, and I was nervous because when you grow your account, that's also a place that I hadn't been before, really. Like, I was really growing it on my own. And I thought to myself, man, I don't want to let go of this momentum. I hope this wasn't luck. And I started, the fear of doubt, the seed of doubt started to creep in. And what I did was, instead, I just focused on, I'm just going to keep my sizing low. And if this was luck, then okay. But if not, it's not going to hurt me if I lose. So that was the beautiful thing about it. And I challenge you, if you're watching this and you've struggled, I'm just telling you what I know. If you start with low sizing, even with the demo account, I know nobody wants to start on demo account over again. If you've been struggling trading, you don't want to go back to a demo, but it's the healthiest thing you can do. Delayed gratification. Get yourself just working on those base hits. That's what you need. You don't need 5R, 10R runners, okay? You need base hits. Once you work yourself up to where you're consistently profitable, and you've got that consistency under your belt, then you can start thinking about putting real live capital in, or maybe opening up a prop account or something like that. But I'm telling you right now, if you can't get profitable on a demo, there's zero chance you're going to be profitable with a prop account. Like, zero chance. Okay, so hope that helps. I wanted to hop on here and just make a quick video, let you guys know that I'm excited about 2026. Hope you guys had a good trading year. Hope you're ready for what's to come in 2026. Let's make the best version of yourself that we can possibly make together. I'm here to help. And if you want to come and see how I trade using the Orb Crazy Horse strategy with our custom indicator, that link is in the description, and we can definitely help you get consistent as well. Okay, from me to you, I will see you in the next video. God bless. Okay, Merry Christmas, and I'll see you in the new year. Peace.